All right, so we have here the example problem. Um, Gives you the trial balance. You're by this time you should be familiar with the trial balance, and then it has the list of the accounts. You have the debit and credit. But this is the trial balance prior to adjustment or adjusting entries. So the reason why we need to adjust our, the accounts or the trial balance is to reflect the true financial values for the company. Imagine supplies here. Like every time you purchase supplies, you debit supplies, right? And then credit cash or credit accounts payable. So 650 value of the supplies here in this trial balance, right? Imagine that you purchased this in the beginning of the month, January 1. You purchased these supplies for 650. At the end of January 31, do you think your supplies is still 650? It's no longer 650
Oh,
because you use some of those supplies. Like say you purchase you know, uh 100 of these pens, right? Of course you're using pens in your company. So at the end of January 31st, it's no longer 100 pens because you already used probably like 30 pens, right? So that's the reason why at the end of the month or at the end of the period, we have to adjust some of the assets here to reflect the true value of what we have at the end of the period. And that is the essence of the adjusting entries. We are, correcting or adjusting what it's supposed to be the value of our asset at the end, assets and liabilities at the end of the period. So in that example, we use 30 pens. Therefore, we will expense those 30 pens. So in this particular example, supplies originally as 650, but down here it says supplies used is 535. So what would be our adjusting entries to record that supplies used? And then another thing is prepaid insurance, right? So when we talk about prepaid insurance, we are buying or purchasing insurance in advance. Um, like for instance, in a company we purchase like, an annual car insurance or vehicle insurance, right? So with that with that 1 year, it costs us 4,500, right? So per month, how much would that be if we need to expense that portion that we use for that month for that insurance? So you just divide it by 12, and that is your monthly insurance expense. So in this case, whatever we used or expired insurance, that is the amount that we will expense. So in this case, we say that expired or used insurance is worth 750. So we used up or we expired 750 out of these 4,500. So what will be your adjusting entries or entry to record for the expired insurance? Okay, that's for the prepaid insurance. Now we're going to talk about equipment here for depreciation. So when we purchased this equipment, the cost of that equipment was 3,500. And this equipment, we want to, like put there because it's depreciating. It's not always new. It's like buying a car, right? When you buy a car, a brand new car, and when you drive it out of the dealer's lot, we always say that it's gonna depreciate a lot once you purchase a new car and then you drove it outside of the parking lot when you purchase it, then it's already depreciating. Similar to this, so we purchased equipment originally 3,500, and this equipment is a depreciating asset. So we have to depreciate this, and that's what depreciation we record as an expense. So in this case, depreciation expense on that equipment is $300. So what is your adjusting entry to record that $300? Okay. So the last one, the last, I would say, adjusting entries here is for the accrued wages. So when we talk about accrued wages, we are recording an expense that's already incurred but not yet paid. So wages accrued or earned since the last payday was 1,055. This is the amount owed and to be paid to the employees on the next payday. So these are already work that employees already incurred, meaning they already worked for it. So we are liable at the end of January 31 for this 1,055. But the payday will be happening after January 31st. So probably like February 2nd or February 3rd. But we have to measure at the end of January 31 how much wages that we already incurred or earned by the employees that we will pay come February. And that's the amount that we will record as an adjusting entry for accrued wages. So those are the 4 adjusting entries that we need to make in order to prepare for our financial statement, or what we call the adjusted financial statements. So we have the trial balance before the adjustments, and then we will have the adjusting entries. So the way we will put this together is through a working paper or a worksheet. So in this particular example, you have a trial balance. I'm going to pull that up here. So, and then we will complete here the worksheet or the working paper. So the way to complete this is it's called the 10 column. Anna, do you have a question? Are we good? All right. So I thought someone has a question, but this is what we call a 10 column working paper or a 10 column worksheet. So those 10 columns are the debit and credit for your trial balance, the debit and credit for your adjustments, the debit and credit for your adjusted trial balance, and extend the debit and credit to your income statement and a debit and credit to your balance sheet. So how do we do this? So we have the trial balance here on top. We will fill out the worksheet down here. So we look at here, cash is 17,910. So we'll just put here cash 17,910. Nothing on credit. So it says here, make sure you enter 0 if no amount is required. So if you leave it blank in your homework assignment, it's gonna give you an error or not a full credit. So you have to enter 0 there. And then for supplies we have 650. So supplies is a debit, 650. And then we have prepaid insurance. We look at prepaid insurance, we have 4,500. And again, it's a debit. So you put 4,500. Again, don't forget the 0 if the amount is not required. And then for equipment is 3,500. Equipment is 15,400. And then that's a debit, 0 on a credit. And then accumulated depreciation is a credit of 3,500. So 0 on a debit, 3,500 on a credit. And then accounts payable, we have 2,450 credit, 0 on a debit, 2,450 on a credit. And then the capital is 25,800 on a credit. So 25,800 credit, 0 on a debit. And then drawing, we have 3,000 on the debit, and then 0 on a credit. And then the revenue, financial services fees, we have 15,550 credit, and then 0 on a debit. And then we go with wages expense, 4,025 debit, and then 0 on a credit. And then rent expense is a debit. The amount is 1,200. And then 0 on a credit. Utilities expense is 430 debit. And then 0 on a credit. Repair expense is 110 debit, 0 on a credit. And then miscellaneous expense is 75 debit, 0 on a credit. When you sum this up, total this one up, it's going to give you a total of 47,300. So that's how you fill out the trial balance. And then you see here, it's going to be 0, all 0 here, because there's nothing here. We just fill out the trial balance based on the given values that we have there on top for our, unadjusted trial balance. So nothing here. Put all zeros. Make sure you put all the zeros. Otherwise, it's going to give you an error. Okay, now the next step here for our working paper is to put the adjusting entries, okay, based on the data provided here from A to D. So the first one is expired or used insurance. So what is your entry for the expired or used up insurance 750? So our first entry here, our first adjusting entry is for this one, the 750 for the used up insurance. So the debit there would be insurance expense 750, and then credit prepaid insurance 750. And then once you post this here on the general journal, you then go to here in the worksheet column for adjustment and look for the insurance expense debit 750. Look for insurance expense. There you go, insurance expense 750 debit. And then a credit to prepaid insurance 750. So look for prepaid insurance, a credit 750. Okay, so that's how you post the first adjusting entry. We call it the prepaid or the expired insurance adjusting entry. The next one would be depreciation expense on equipment, $300. So what is your entry to record that $300 of depreciation on equipment? So the debit here is depreciation expense, equipment, $300, and a credit to accumulated depreciation equipment, $300. Again, once you have this journal entry, you will put that in your working paper or worksheet under the adjustment column. First up would be depreciation expense equipment, $300. And then that's a debit, and a credit to accumulated depreciation equipment, 300. So in this case, you are not crediting equipment, but you are crediting the accumulated depreciation. Okay, next one would be the wages. So we need to accrue wages. So how do we record now the 1,055 accrued wages? So down here, again, you will debit wages expense, 1,055, and credit wages payable, not wages expense, but wages payable, which is a liability account, 1,055. Again, you will post that here on your working paper under the adjustment column. Wages expense debit, 1,055, And then wages payable credit 1,055. Okay. And then once you're done with that, the last item here is the supplies used. Again, we use that supplies, we expense that for 535. So the entry to record that, the adjusting entry to record that supplies use is a debit to supplies expense. Again, not the supplies asset account, but the expense account for supplies expense. And how much you're saying? 535. And a credit to supplies. So supplies credit, which is the asset account, 535. And then you will again put that on the adjustment column for the supplies expense, 535 debit, and a credit to the supplies, 535. Okay. Now, that's all our adjustments, our 4 adjusting entries. And then for the blank boxes here, you just put all zeros there. So we'll do that later on. So not to confuse you with the next column, 2 columns here for the adjusted trial balance. So for the adjusted trial balance, just do this one quickly here. Share, and then just need to put that here quickly. Second. Just grab this one. All right. So again, continuing on here. So we have now done putting the adjustments. We have the journal entry for adjusting entries here. Now we will extend to the adjusted trial balance column. So if you look at here, cash, 17,910, 0 credit. There's no adjustment for cash, right? So we're gonna put 0, 0. We didn't put any adjusting entries for cash. You just need to extend. If it's a debit here, and on your adjustment, there's 0 debit and 0 credit. So 17,910 will result to a debit of 17,910. Okay. And now for supplies, you have 650, right? 650 original debit and adjusted trial balance. And then and on your adjustment, you have a credit. So you have a debit of 650 and you have a credit of 535. So in the end, your supplies will now be only 115. So you used up 535. Your balance in the end, your adjusted supplies is now a 115 balance. Okay. So for prepaid insurance, originally you have 4,500, right? And then you have a credit adjustment of 750. So this is a credit, this is a debit. So what the mathematical operation is 4,500 minus 750 will give you a new balance of your prepaid insurance in the amount of 3,750. So there's no 0 debit adjustment here. Now for equipment, it's 15,400 debit. No adjustment on debit, no adjustment on credit. So the balance you just extend to a debit of 15,400. Now for accumulated depreciation, you have a credit of 3,500 and an adjustment of 300 credits. So you will add that 3,500 with this 300, resulting to a credit of 3,800. Okay. And now for accounts payable, no adjustments. And you had a 2,450 credit. So you just need to add 2,450 credit. Same thing with capital. There's no adjustment to the capital. So you will extend that credit 25,800 for capital. No adjustment for drawing. So it's the debit of 3,000. You just need to extend 3,000 there as a debit. And then for for revenue, there's no adjustment to the revenue. Again, you just need to extend that 15,550 credit. Now for wages expense, you have originally an adjusted balance of 4,025. You have an adjustment, a debit of 1,055. So you have to add the two. You will get 5,080 total for the debit. No credit adjustment. And then for rent expense, no adjustment for rent expense. So you just need to extend the $1,200 debit for rent expense. Same thing with utilities expense. No adjustment there. So you just need to extend 430 debit for utilities. Same thing with repairs, repair expense, extend the 110, and miscellaneous expense for $75. Now, there's some account in here. Let's just put 0 here for now. We have insurance expense. There's nothing in our original or unadjusted trial balance, but we have an adjustment of 750 debit. So we will just extend that 750 insurance expense. Same thing with depreciation expense. We will need to extend that 300 depreciation expense. And wages payable. So we will extend that credit of wages payable. And same thing with insurance supplies expense. We'll extend that $535 debit adjustment. So now you need to total this adjustment, by the way. So make sure it's all balanced debit and credit. So 750 plus 300 plus 35. So 2640 is your total here. And then nothing here yet for the net income. And then for the adjusted trial balance, you have to total the debit and credit, right? So the total debit would be, just look into that. $15,400, $3,000, $5,080, $1,200, $430, $110, $75, $750, $300, $535. Total debit is $48,655, and then the total credit would be 3,800 plus 2,450 plus 25,800 plus 15,550 plus 1,055 will give us 48,655. Is that correct? Am I missing something in there? Okay. So your adjusted trial balance is balance with debit equals your credit. Now, the next two columns will determine for each of these accounts in the left side where the balance is going to go, right? So we will extend the balance either to the income statement column or to the balance sheet column, okay? So how do we do that? So let's look at now the adjusted trial balance for cash. It has a debit balance of 17,910, zero credit balance. So where are you going to extend that? On the income statement or on the balance sheet? for cash, where will you see that cash account? Income statement or balance sheet?
Balance sheet?
Balance
It's
sheet.
balance sheet. So you're gonna extend that debit 17,910 to your balance sheet, 17,910. So not to your income statement. So you put 0 here, then you will put 0 here, and then nothing on credit. Okay. So that's your cash. How about supplies? We know supplies is an asset. So where are you gonna extend that debit of 115? Income statement or balance sheet? So supplies, you're gonna extend that to your balance sheet column as a debit. So nothing on your income statement, nothing on your credit income statement, and 0 credit on your balance sheet. And then your prepaid insurance, where are you going to extend that? Again, it's going to be under balance sheet, 3,750 debit, nothing on your income statement, nothing on your credit income statement, and there's nothing on credit on the balance sheet. And then the next one would be equipment, 15,400 adjusted trial balance. You will extend that to your balance sheet again, because equipment is an asset. So you will extend that to your balance sheet and just fill out the one that doesn't require any amount to 0. Okay. And then the next one is accumulated depreciation equipment, right? For 3,800 balance. You're going to extend that again to your balance sheet as a credit. It's a contra asset account, right? Next one would be accounts payable with a balance of 2,450. You will extend that to your balance sheet again as a credit, 2,450. And the next one would be capital, 25,800 credit. You will extend that to your balance sheet as your capital, owner's equity. And then drawing a debit of 3,000, you're going to extend that to your balance sheet column for drawing debit. Okay. And then next one would be revenue, financial services fee with a credit of 15,550. So in this case, this is revenue. You will extend that to your income statement. Yeah. So income statement this time for your revenue, nothing on your balance sheet. Okay. Next one would be wages expense. So this is again income statement 5,080 and nothing on your balance sheet. And then next one is rent expense. So all expenses, you will extend that to your income statement, debit, nothing on your balance sheet. Same thing with utilities expense, extend it to your income statement, debit, and then 0 on your balance sheet. Okay. Repair expense, the debit to income statement, nothing on your balance sheet. Same thing with miscellaneous expense, debit to the income statement, and nothing on your balance sheet. Just put 0 there. And then you have insurance expense, a debit, 750. So you will extend that to your income statement as debit and nothing on the balance sheet. And then depreciation expense, equipment is an expense, so it's gonna debit to income statement, and then nothing on the balance sheet.
I looked online. Not even they are really cute.
Any question? I hear a noise background. If you're not talking, can you please put yourself on mute? Okay, thank you. All right, so wages payable, it's a credit, right? So you will extend that to your Where is wages payable? To your balance sheet as a credit. And then supplies expense, income statement, debit, and then nothing in your balance sheet. Now, once you extended to these last 2 or 4 columns for income statement and balance sheet, you just need to total them, right? So the first one is the income statement. So you got 5,080 on the debit side plus 1,200, then 430, then 110, then 75, and then 750, and then 300, and then 535. So the total on the debit side here is 8,480. And then on the credit side, you total it and it's only 15,550. Oops. And then same thing with your balance sheet. You're gonna add all the debit, 17,910 plus 115 plus 3,750 plus 15,400 plus 3,000 will give you 40,175. Then on your credit here, on your balance sheet column, the last column, you have to add 3,800 plus 2,450 plus 25,800 plus 1,055, gonna give you 33,105. So as you can see here on your income statement, you have a debit 8,450. You have a credit 15,550. They are not balanced, right? So what's the difference between 15,550 minus 8,480? So we have 7,070. So since credit or revenue is greater than your total expenses, what is 7,070 represents? That would be your net income. So this is your net income here, 7,000. And where will you put the 7,070? So the difference to make this debit and credit balance, you will put that to the debit side, 7,070, and it will be a total now of 15,550. And then this would be 15,550. So here, your income statement column debit now equals your credit, and the 7,070 represent your net income. Then when you look at the balance sheet, right, you will have, it's not balanced again for the debit 40,175 and a credit of 33,105. So 40,175 minus 33,105 will give us a difference of 7,070 also. So that would be now your, again, net income represents. So it's going to be a credit of a 7,070. And your total for both debits and credit in the end should balance to 40,175, 40,175. So that's how you complete your worksheet or working paper. Any questions?
No.
No, it's clear. Okay, so once you're done with your working paper, you can now prepare your financial statements, and you will get your financial statements on these last 4 columns here under income statement and balance sheet. So if I'm gonna go here, and let me just do one thing quickly here. This one out, this. So we have here our cash, right? Anyway, it's not enough. Okay. So once you have this worksheet here, you can now prepare your income statement under part 2 here. So we have that. We have now the adjusted trial balance. So the adjusted trial balance, it's going to be based now on your working paper. So we will prepare now the financial statements. So I'm going to pull that again. This get a little bigger. Okay. So we have our, like income statement column and the balance sheet column, and we will prepare now the income statement. So the first one on our income statement, and this one you should be familiar already on your financial statements for the last chapters, right? The chapters 2 and 3. So the first one here is the financial services fees. And we look at the amount for financial services, look at your income statement column, financial services here on your adjusted trial balance, 15,550. Gonna put here 15,550. And then that would be your, since we only have one revenue, we just put 15,550 as our total revenue. And then look again now the expense. Now the expenses, we have wages expense on your adjusted income or on the income statement column. It's now 5,080 debit. So wages expense, 5,080. And then we have next one would be rent expense, 1,200. And then now next to rent expense, we will have utilities expense. And that would be utilities is 430. Then next to utilities, we have repair expense. And the amount for repairs is 110. Then what other expenses do we have? Either miscellaneous or insurance expense. What can we see up here? So we have supplies expense. So that's only the selection next to it. So let's look at the supplies expense. It's 535. Now, what would be the next expense here? We got insurance expense. Insurance expense, look at the insurance expense section here, row 750 on our income statement. Then the next one would be depreciation expense equipment. So if we look at depreciation expense equipment, a debit of $300. And then the last one would be miscellaneous expense. And I believe that's $75 in here, 75. So our total expense would be, so we just need to total that, and you can grab it from your worksheet here. The total expense is 8,480. 8,480. Now, 15,550 total revenue minus your total expense of 8,480, and that is your net income here, 7,070. 7,070. Okay, that's your net income. Now, the next financial statement that you need to prepare again is the statement of owner's equity. You will need this net income for your statement of owner's equity. So here, the first item here would be your beginning capital, which is if you go to your, again, worksheet, your beginning capital here is 25,800. And then what is the investment during January? There's nothing. The problem is silent. We're just going to put 0. And then the next one would be your net income for January, which is 7,070. You grab this net income here and then put it there. Your subtotal is 7,070. Now, and the last one that we need to get is the withdrawals. So less withdrawals for January. And then if we look at our worksheet again, the withdrawals for January was $3,000. So in our balance sheet section, so $3,000. And then that would be, is it an increase or decrease in capital? So we got 7,070 minus 3,000. That is still an increase to your capital because your net income, there's no investment. You have your net income and you have your withdrawal. So 4,070 is still an increase in your capital. And this would be the result of your ending or January 31st capital account. So that would be 4,070 increase in capital plus 25,800. That would give you an ending capital of 29,870. Okay, so that is your statement of owner's equity. And the last statement that we need to prepare is the balance sheet. So you will need this amount, 29,870, in the preparation of your balance sheet. Again, going back to your worksheet here, for the balance sheet column, you will refer to your balance sheet column, start with cash, and our cash amount is 17,910. And then next would be, I believe it's supplies. So supplies, 115. Then we got, next one would be prepaid insurance. So what would be our prepaid, or what was our prepaid insurance balance? That's 3,750. Again, refer to your balance sheet column. And then we got the equipment. So if we look at the equipment in our balance sheet column, our equipment was 15,400. And then we will subtract the accumulated depreciation equipment. And in our balance sheet area, we have now 3,800 for our accumulated depreciation. So the net book value of your equipment after depreciation is 15,400 minus 3,800. That would give you 11,600 net book value as of January 31st for your equipment. So this is what you call your net book value for that equipment. The net book value is defined as your equipment cost minus your accumulated depreciation. That's your equipment net book value. So 11,600, we're going to add all those assets. We got 11,600 of your net book value of equipment plus cash of 17,910 plus your supplies of 115 plus your prepaid insurance of 3,750. Your total assets as of January 31st is going to be 33,375. And now we're going to look at your liabilities. Accounts payable, refer to your balance sheet column. Accounts payable, now we have 2,450. And then any other liabilities. So if we look at the this worksheet under the balance sheet column, there's another liability here, and that's what you call the new account here, wages payable, 1,055. So you're gonna put here wages payable, 1,055. So now you have two liabilities accounts, 2,450 plus 1,055. Your total liabilities is 3,505, right? And then the owner's equity is your Wilson capital. So the amount here that you will put for your owner's equity Wilson capital is your statement of owner's equity capital ending January 31st. So you will put here 29,870. You will add your liabilities and your equity, 3,505 plus 29,870 will give you 33,375. Your assets here, 33,375, is equal to your total liabilities and owner's equity. So that's how you prepare your financial statements. That's how we prepare our working paper or worksheet here with the adjusting entries. It's still loading, but okay. So got it, everything here. So just pay attention in your homework assignment. Make sure you put zeros in all those boxes that doesn't require any amount. It says here, if no amount is required, enter 0. Otherwise, it's gonna if you just leave it blank, it's gonna give you a wrong answer or an X. So make sure you put that 0 there. So that is chapter 4 for you. Any question? Gonna stop recording for now.